today we're signing, and this is very historic, an executive order establishing a strategic Bitcoin reserve and digital asset stockpile. This is a promise that you made throughout the campaign, and today we're keeping that promise. The reserve will be capitalized with Bitcoin that the federal government already owns, so it won't cost taxpayers a dime. This is like a digital Fort Knox for digital gold. And premature sales of Bitcoin over the past years cost American taxpayers over $17 billion in lost value because we didn't have a long-term strategy.
Right.
Now we do. So.
And this is something you believe in fully?
100%, yeah.
Okay.
And the whole community believes in it.
Very good. And I made the promise, right?
Absolutely.
Okay.
That's a good one.
I think it's important to keep in mind what the role of a reserve is. So a reserve is almost like a backstop, and in the asset-backed view, kind of a way to justify the underlying security of an asset, like in this case, the U.S. financial system, the U.S. economy, the dollar, right? So what you would want from a reserve, in my opinion, and what you want from like a gold reserve, is that asset-backed view, that asset is inversely correlated with some other set of events, right? So if there's some set of extreme events, gold becomes more valuable. And so this is why the central banks have all been buying gold in record numbers. And so the crypto reserve, or any reserve, really has to create this inversely correlated relationship, right? You're basically practicing diversification. And so then the question becomes, once you define what the role of a reserve is, what is the benefit of including one coin or another coin in that reserve? And the fundamental answer to that is that it creates this inversely correlated relationship with something else happening that you're not currently protected against. And so the question there is, how does a reserve composed of these various tokens give you that greater assurance of being protected and inversely correlated and diversified against these other events? And it seems like the general idea right now is to have an index, right? So you have an index of tokens that basically create an inverse correlation on a holistic industry basis rather than just through Bitcoin. But Bitcoin does have a very clear thesis that it is inversely correlated with certain events in the state actor world, how the traditional financial system is developing. So I would view a crypto reserve as a mechanism for diversification and a way to create an asset backstop for the U.S. economy, U.S. financial system, U.S. dollar, and so on. Maybe there's another category of reserve, such as Bitcoin and whatever other assets that fall into the category of a crypto reserve. And then maybe there's another category of the reserve, which is the assets in the sovereign wealth fund. But I think if you add all of those up together with gold, you still won't meet the standard of one-to-one backing of every U.S. dollar. That's just not how fractional reserve banking works. That's not how fiat works, right? Fiat is let there be. So okay, we went off the gold standard and that's it. That was the choice.
That they own it. I don't know how much more mileage you get out of tweets and announcements. So tomorrow is like the event. Do you know who's going? Are you going?
No.
Do you know anyone that's going? I'm assuming Sailor.
I'm sure.
So like tomorrow, is it a freak show? Is it all pump and dump people from Twitter? Or is it like Larry Fink? I don't know. Like we're going to find out together.
Maybe all of the above.
Prediction? Pain! Ladies and gentlemen, President Trump has put himself in the awkward position of predicting pain, and he's delivering it to owners of stocks in a way that doesn't have to happen. We don't need to have days like today where the Dow drops 428 points, S&P plunges 1.78%, and then NASDAQ plummets 2.61%, putting that index down 10% from its 52-week high. Now it's getting worse. First, let me say, I'm not going to quibble with the president's ultimate goals. He ran on cracking down on illegal immigration and fentanyl traffickers. He ran on closing our trade deficits. Now he's in office. He gets to set the agenda. He's doing exactly what he said he would do, what people voted for. But, man, I think there are much better ways to go about doing what he's doing. He can implement his agenda without destroying investor confidence and causing the stock market to roll over. So I'd rather offer my plan now rather than wait until all the averages are down 10% like the NASDAQ, at which point it'll already be too late.
I wonder if Bob Michael is onto something and whether you would agree with this idea that more broadly, maybe it's not this week, but maybe it's this month, maybe it's the next couple of months that we're seeing the peak in dollar exceptionalism. And with all of the money looking to be raised elsewhere, there is going to be a sucking sound away from the United States in dollar assets.
Well, I think this is a question really about U.S. exceptionalism, really for the next decade, for the next 2 or 3 decades. Even I don't think it's going to be able to be answered in a very short term. I mean, to me, one of the definitions of U.S. exceptionalism is the fact that the dollar has its own fundamentals, and that derives from the fact that about 50% of the world's invoices are in dollars, and that means that even when negative news comes from, say, the U.S. budget, people need their dollars. They buy their dollars. That's why it is essentially a safe haven. And for that to change, we're going to have this very slow, and it's already started, this very slow progression away from using dollars as an invoicing currency, and therefore, as a reserve currency. That has started. It's quite possible that Trump's policies with respect to Europe, with respect to Canada, Mexico, etc., make people move away from the dollars, but that is a very slow process, and I don't think we're going to be able to answer that question quickly.
Welcome to the Crypto Teacher, and I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And we have Trump signing that executive order. And of course, that executive order comes with a twist. And he's doing exactly what we thought he would do, is just maintain what they already have. And then they'll have a crypto stockpile. But guys, you also can see the agenda behind that, because XRP helps with the payment rails and the rest of a lot of these cryptos. Their currencies are protocols that move money. And that's the reason why that will be under the Treasury. So we can clearly see how they're mapping out the foundation of this new payment system. And we have Chainlink Sergey on the crypto reserve that it should be diversified. But like I stated, with the U.S. Treasury being in charge of these cryptos, they're letting you know these cryptos are going to be used for this new payment system. And remember, the Crypto Teacher told you. And don't forget, we have the Crypto Summit tomorrow. And we know they like to do events on Friday. They always say the entertainment for the weekend. And remember, the Crypto Teacher told you. And we have Jim Cramer says Trump doesn't have to tank the market. But like I told you, every first quarter we always have a pullback. But now that Trump is in office, it's time to build. It's time to build this fourth industrial revolution. And we have the U.S. dollar in jeopardy, falling, and we know that's what Trump wants to do. But will the dollar fall fast or slow? And the BRICS nations have been preparing for this since 2014. And this lady is right. It would take a long time if we stayed with fiat. It would take decades because all this money has been printed. But since we're going digital, it's only going to take a few more years to get us to this level playing field. And remember, the Crypto Teacher told you. And then we have job cuts are stepping up, as I advised you they would. And it's only going to get worse. And the jobs report comes out tomorrow. Of course, they're going to play it like it's not so bad. But the back half of this year is going to be bad. We already had job cuts already scheduled. And then plus those who are getting severance, that would have ended by then. But then also, guys, we have delinquencies in auto loans, housing, the worst since the financial crisis. And like I always tell you, go to the Fed website because you could clearly see the charts that delinquencies were rising. The consumer is hurting, but we know they're going to continue on spending because that's what they're programmed to do. And remember, the Crypto Teacher told you. And these Trump tariffs, I told you, would be timed with the Fed rate cuts. But the tariffs that are on China, of course, China puts tariffs on their goods, and that's going to hurt the everyday consumer inside the United States. They're making everything. We're not manufacturing anything. And remember, the Crypto Teacher told you. And we see the markets pumping and dumping as yield rates are starting to settle down. And again, I told you, the markets were going to be pumping and dumping. And I don't see the Fed cutting rates just because inflation is here. We see the jobs market is softening, but inflation is sticky because of what? That's right, corporate greed. There's a handful of companies that own everything. They just go by 1,000 different names. It's an illusion of choice. And remember, the crypto teacher told you. And we have Walgreens is trying to go private. And we're going to see a whole lot of corporations moving in that same direction. And remember, the crypto teacher told you. Because he knows, when it comes to the NWO, it's all planned out. You have a wonderful day.
New data analysis just came out that says U.S. employers cut more jobs last month than any February since 2009. The largest share of job cut announcements coming in the government sector. Your reaction?
What a sad tally that is for the United States economy. And this is allegedly a president who wants to grow jobs.
Challenger job cuts is a data point that maybe we look past. Not this morning.
Not this morning. This is going to catch people's attention. And Lisa, you've been asking, when are we going to see Doge in the data? This is the first black cloud on the horizon, I think. 172,000 job cuts announced. That's a more than 100% increase over the last month. Now, Challenger breaks it down this way, saying government jobs, they lost almost 62,000. Then consumer products and technology also contribute to this. Education jobs down by almost 3,000, and that may be part of the NIH situation. Now, the second biggest is retail. That doesn't have anything to do with Doge, but it probably does have to do with the 20,000 employees at the Joann stores, which are going out of business, and also some store closings from Macy's and Kohl's and others. So while this data probably won't show up in the February number we get tomorrow, we are setting ourselves up for a very interesting March. I do have to caution that job cut announcements don't necessarily mean that many job cuts, because maybe they're filled through attrition, or maybe they don't happen over a period of time. So we don't usually pay a lot of attention to Challenger, as you said, John. But in this case, it's a number that certainly feeds the narrative we've got these days.
Doge efforts having a big impact on jobs. A new report this morning that U.S. layoffs hit the highest level they've seen since 2020 in the month of February, and more than a third of those jobs were federal. Steve Leisman's here. He's got more on just how much Doge could be in tomorrow's jobs report, of course.
But it was a mix of layoffs from government and private sector, including 63K from the government. That includes federal and private government contractors. Retail, 45,000. They were hit by some bad weather, of course. And 22,000 from tech. We've had layoff announcements from HP, Meta, and Workday among the giants that announced in February. The Doge impact, the top reason cited for job cuts, it was followed by market and economic conditions and bankruptcy. Now, the bulk of government job cuts are likely too recent to show up in tomorrow's job report. Workers won't be counted as unemployed till their severance runs out and they perhaps file for it. But roughly 30K federal workers, 30,000, they leave their jobs monthly. President Trump froze government hiring on day one of his presidency. That means vacated jobs won't be filled, creating some negative government numbers that might drag on the headline tomorrow, maybe more than is expected. Economists looking for declines of 5 to 10,000 in the government sector. But Evercore ISI, in a research piece, suggests total job losses from Doge could be as low as 50 this year. That's if the government gets back into hiring, or as high as 660,000 in a worst-case scenario created by what it calls Doge policy uncertainty.
Yeah, let me go through the data here because this is a good snapshot. Yes, it's fourth quarter data, but it's a snapshot of where the American consumer is heading at the end of 2024. Let me set the table first in terms of the amount borrowed, monthly payments, how things changed in the fourth quarter year over year. Again, this is versus Q4 of 23. Average amount borrowed, that's close to a record high, an increase of more than $1,000. Look at the average monthly payment. That is also close to a record high at $742. Now for the troubling part of this story, which comes down to delinquencies, or people who are not making their payments basically they're not making their payments on a regular basis. 60-day delinquencies, and what we're showing you here is average transaction prices, which, by the way, at more than $48,000, that's what you and I are paying at a dealership on average. almost at a record high. According to Experian, 60-day auto loan delinquencies at an all-time high of 0.99% of all open loans that they were checking in the fourth quarter. 30-day auto delinquencies also close to a record high, highest since the recession in 2008 and 2009. And
been manageable, high debt, but guess what? We can afford it. But now some of that is beginning to change. For more on both the housing and car stories, let's bring in Diana Olick and Phil LeBeau. Diana, let's start with you. What are you seeing in one particularly, call it fragile part of the mortgage market?
One major red flag, FHA loans. Their delinquency rate, while always higher, has been rising recently, now hitting 11.3%, and that is the highest since 2013.
Just posting in the last few minutes on True Social that he just spoke with Mexican President Claudia Sheinbaum and that he has agreed Mexico will not be required to pay tariffs on anything that falls under the USMCA agreement. He says this deal will last until April 2nd. That's when those reciprocal tariffs will begin. He also says he did this as an accommodation out of respect for President Sheinbaum, that our relationship has been a very good one, and we are working hard together on the border, both in terms of stopping illegal aliens from entering the United States and likewise stopping fentanyl. He says thank you to the Mexican president.
Relief would have given the markets a little bit of relief. We didn't really see that today.
Saw it yesterday. I mean, or saw when you saw it or 2 days ago in the form of General Motors, and you saw that bounce when they rolled it back to April, I guess. But diminishing marginal returns, and I do think they're trying to sort of walk this dance between making sure the market hangs in there and talking tough on tariffs, and that's a difficult dance or difficult tightrope to navigate. But that's the one they're trying to do. With that said, the October low, October 31st, I think, was 5,700-ish, and we're right there. Critical support levels, a lot of technical damage being done in the meantime. And again, a VIX at basically 24 and change for a prolonged period of time is something we've been talking about. VIX is going to stay elevated, and I think that's why you're going to continue to see these wild swings.
$1 billion take-private deal with Sycamore Partners. That's the private equity firm, which, if approved, would be one of the biggest leverage buyouts in the past decade. This is Walgreens, the pharmacy chain that has been challenged in recent years. Chief Executive Tim Wentworth is quoted by the Wall Street Journal saying, "Going private is going to let us be more focused, more nimble, more long-term in our decision-making in the context of the challenges that we continue to face." Stock up here.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important.
Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, well, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 Kids books, is time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.